Have you ever wondered about the story behind Bitcoin? It's more than just digital money. It's a revolutionary idea that has reshaped our understanding of finance. Today, we're going to dive deep into the incredible journey of Bitcoin, from a mysterious white paper to a global phenomenon. It all began on October 31st, 2008. The world was still reeling from a massive financial crisis. Trust in banks and traditional financial systems was at an all-time low. Out of this chaos, a mysterious figure, or possibly a group, known only as Satoshi Nakamoto, published a 9-page document online. The title was simple: Bitcoin, a peer-to-peer electronic cash system. This white paper was revolutionary. It proposed a new kind of money that was entirely digital and decentralized. This meant it wouldn't be controlled by any single bank, government, or company. Instead, transactions would be verified by a network of computers around the world, all recorded on a public ledger called the blockchain. Think of it like a shared digital accounting book that everyone can see but no one can alter. This system was designed to be transparent, secure, and resistant to censorship. It was a bold answer to the problems of the traditional financial world. But at the time, it was just an idea, a piece of code waiting to be brought to life. Just a few months later, on January 3rd, 2009, Satoshi Nakamoto mined the very first block of the Bitcoin network. This is now famously known as the Genesis block. Embedded within the code of this block was a hidden message, a headline from the Times newspaper: Chancellor on brink of second bailout for banks. This wasn't just a random piece of text. It was a powerful statement, a permanent timestamp that anchored Bitcoin's creation to a specific moment of financial turmoil. It was a clear signal of Bitcoin's purpose: to offer an alternative to a failing system. For the first year, Bitcoin was mostly a curiosity for a small community of cryptographers and tech enthusiasts. They were the early pioneers, mining coins on their home computers and discussing its potential in online forums. The value of one Bitcoin was practically zero. It was more of a digital collectible, a proof of concept. The first known exchange rate was established in October 2009, where $1 could get you over 1,300 Bitcoin. Imagine that. Then came a legendary moment that would forever be celebrated in the crypto world. On May 22nd, 2010, a programmer named Laszlo Hanyecz made the first ever real-world transaction using Bitcoin. He posted on a forum offering to pay 10,000 Bitcoin for 2 large pizzas. Someone in the UK accepted the offer, ordered the pizzas from a local Papa John's in Florida, and had them delivered to Laszlo's house. Those 2 pizzas, paid for with 10,000 Bitcoin, were worth about $41 at the time. Today, those same 10,000 Bitcoin would be worth hundreds of millions of dollars. This event, now known as Bitcoin Pizza Day, marked a crucial step. It proved that Bitcoin could be used as an actual medium of exchange, not just a hobbyist's experiment. As more people started to see Bitcoin's potential, the need for a marketplace to buy and sell it became clear. In July 2010, a new platform called MT Gox was launched. Originally, it was a website for trading magic, the gathering cards at S, where the name comes from. Magic, the gathering online exchange. It quickly pivoted to become the world's leading Bitcoin exchange. By 2013, MT Gox was handling over 70% of all Bitcoin transactions worldwide. It was the gateway for many early adopters to enter the crypto space. Bitcoin's price started to climb, hitting $1 for the first time in February 2011, and then surging to over $30 later that year. Bitcoin was no longer just a niche interest. It was starting to get noticed. But this rapid growth came with significant challenges. The early days of Bitcoin were like the Wild West. The ecosystem was immature, and security was a major concern. Mt. Gox, the giant of the crypto world, turned out to have serious vulnerabilities. In early 2014, the exchange abruptly halted all withdrawals. Panic set in. A few weeks later, the company filed for bankruptcy, announcing that a staggering 850,000 Bitcoin had been lost or stolen, an amount worth nearly $500 million at the time. This was a catastrophic event. The price of Bitcoin plummeted, and public trust was shattered. Many declared Bitcoin dead. The collapse of Mt. Gox was a brutal wake-up call, highlighting the immense risks of a new, unregulated market. It taught the community a hard lesson about the importance of security and the dangers of centralization. Yet, despite this massive setback, Bitcoin did not die. Its core technology, the decentralized network, continued to operate flawlessly. The community of developers and believers kept working, building more secure wallets and more reliable exchanges. A now unique, pre-programmed feature of Bitcoin's code was about to play a major role in its resilience. The halving. So, what is the halving? Bitcoin was designed to have a fixed supply of 21 million coins, to control the rate at which new coins are created. Satoshi Nakamoto built in a mechanism that cuts the reward from mining new blocks in half, approximately every 4 years. The first halving occurred in November 2012, reducing the reward from 50 Bitcoin per block to 25. The second happened in July 2016, cutting it to 12.5, and the most recent one in May 2020 dropped it to 6.25. These halving events are incredibly significant. By reducing the supply of new Bitcoin, they create scarcity, which tends to drive up the price, assuming demand stays constant or increases. Historically, each halving has been followed by a major bull run, the 2012 having preceded the price surge of 2013, the 2016 having set the stage for the epic bull run of 2017, where Bitcoin's price skyrocketed from under $1,000 to nearly $20,000. This predictable reduction in supply makes Bitcoin a deflationary asset, a stark contrast to traditional currencies which can be printed indefinitely by central banks. Bitcoin's success and its open source code also inspired a wave of innovation. Developers saw the potential of blockchain technology and began to create their own versions, each with unique features. This led to the rise of altcoins, or alternative crypto. Litecoin, created in 2011, aimed to be the silver to Bitcoin's gold, offering faster transaction times. Ethereum, launched in 2015, introduced the concept of smart contract self-executing contracts with the terms of the agreement directly written into code. This opened up a whole new world of possibilities for decentralized applications, or DApps, and laid the groundwork for decentralized finance, and NFTs. Suddenly, the blockchain wasn't just for money, it was a platform for building a new, decentralized internet. As the crypto ecosystem matured, mainstream adoption started to feel less like a dream and more like an inevitability. The 2017 bull run brought Bitcoin into the global spotlight. It was no longer just for tech geeks. It was a topic of conversation at dinner tables around the world. Major financial institutions, which had once dismissed Bitcoin, began to take notice. In late 2017, the Chicago Mercantile Exchange and the Chicago Board Options Exchange launched Bitcoin futures contracts, allowing institutional investors to gain exposure to Bitcoin in a regulated environment. This was a huge step toward legitimizing Bitcoin as a credible asset class. The momentum continued to build. In 2020, PayPal, a global payment giant with over 300 million users, announced that it would allow its customers to buy, sell, and hold Bitcoin and other cryptocurrencies directly within their accounts. This was a game. It provided an easy and familiar entry point for millions of people who were curious about crypto but intimidated by the complexities of exchanges and wallets. Other major companies followed suit. Square, led by Bitcoin advocate Jack Dorsey, invested millions into Bitcoin for its corporate treasury. Tesla, the electric car company, made a blockbuster announcement in early 2021 that it had purchased $1.5 billion worth of Bitcoin and would even begin accepting it as payment for its cars. Although that decision was later reversed due to environmental concerns about mining. These moves by major corporations signaled a massive shift. Bitcoin was no longer on the fringes. It was entering the corporate mainstream. Institutional investors, like hedge funds and asset management firms, began allocating portions of their portfolios to Bitcoin, viewing it as a digital gold, a hedge against inflation and economic uncertainty. The narrative was changing. Bitcoin wasn't just speculative internet money. It was a serious store of value. Then came one of the most significant developments in Bitcoin's history. In June 2021, the nation of El Salvador made a historic move. Its government passed a law making Bitcoin legal tender, alongside the US dollar. This was unprecedented. For the first time, a sovereign nation had officially adopted Bitcoin as a national currency. The government launched a digital wallet, gave $30 in Bitcoin to every citizen who signed up, and began installing Bitcoin ATMs. Across the country, the goal was to promote financial inclusion for the 70% of Salvadorans who didn't have a bank account, and to reduce the costs of international remittances, which make up a huge part of their economy. While the implementation has faced its share of challenges and criticism, It marked a monumental step in Bitcoin's evolution, from a digital asset to a real-world currency used for daily transactions on a national scale. And the story is far from over. In early 2024, after years of anticipation, the U.S. Securities and Exchange Commission, or SEC, approved the first-ever spot Bitcoin ETF, or exchange-traded funds. This was a landmark decision that provides a regulated, accessible way for everyday investors to buy Bitcoin through their traditional brokerage accounts, just like buying a stock. The launch of these ETFs unleashed a new wave of institutional capital and has been a major driver of Bitcoin ETF's recent price appreciation, pushing it to new all-time highs. From an obscure white paper to a global financial force, the history of Bitcoin is a story of innovation, resilience, and revolution. It has survived market crashes, massive hacks, and constant skepticism. It has inspired a multi-trillion-dollar industry and challenged the very foundations of our financial systems. We are still in the early chapters of this story, and no one knows for sure what the future holds. But one thing is certain: the world has been permanently changed by the mysterious creation of Satoshi Nakamoto. Thanks for watching our deep dive into the history of Bitcoin. If you found this journey as fascinating as we did, make sure to hit that like button and subscribe for more content about the ever-evolving world of technology and finance. Let us know in the comments what part of Bitcoin's history you find most interesting. See you in the next video.